Alright everyone, Cowboy Trades here. Welcome back to the channel for a super quick update on some on-chain metrics for the equity markets. We're going to provide a further update on some on-chain metrics regarding global liquidity in tomorrow's video. These on-chain metrics didn't quite fit the narrative of global liquidity, so we're going to discuss them in a separate video very quickly and compendiously. So let's dive right into the equity market analysis. Now, first of all, I want to talk about what's happening with the insider transaction ratio and smart money in the markets. We just, of course, made a Bitcoin video talking about a new trade that we are entering. We were discussing in this video how you are seeing institutional money and whales currently selling out of Bitcoin. You are seeing the same thing in the insider transaction ratio right now for the S&P 500. Now, we're currently seeing a double spike in the insider transaction ratio in June or July, which is bearish. This means that corporate insiders, either officers or directors, are selling their securities and shares within their own equity companies. Now, if we come over to the corporate insiders chart, this is of course something we've been tracking on the channel since around about April of 2022 last year. We've detailed all of the sales and purchases over on this corporate insiders chart. Very, very simple. The red lines mark where the corporate insiders have been selling. The green lines mark where they've been buying. Now, as you can clearly see, they don't always 100% beautifully time the market. They don't sell every single top. They don't buy every single bottom, but you can see they pretty well time the ebbs and flows of the markets, and they typically do this very well around earnings season. Often when you see the equity markets rally against earnings, which we've been discussing on the channel, we've been of course talking about how the fact that the S&P 500 and equity markets are really rallying because of investors right now, not necessarily equity market strength. If you're looking at things like the P to E ratio, looking at the price divided by the earnings per share, earnings in terms of these equity market companies, they are not doing too well. It's not like we've got a ton of new liquidity in the ecosystem. It's not like we've got tons of new revenue and sales pumping into the economy right now, pumping up these stocks. It's really just retail investors buying into the stock market right now. And we are seeing the other side of that coin in the insider transaction ratio, meaning that the insiders who are inside these individual companies are currently selling to the retail traders, which are happy to buy the rally right now. So just like we discussed in the video that I uploaded 20 minutes ago for Bitcoin, this is of course bearish. You've got Bitcoin whales selling Bitcoin, and you've got corporate insiders selling their own shares of the S&P 500 right now. We've really been diverging against this quite recently. I don't know how long the equity markets can continue to rally when insiders are continuing to sell their stocks to retail traders. Now, moving on from the insider transaction ratio, as we've been talking about, what is driving the equity market rally right now? Is it strong price to earnings ratio? Is there lots of earnings coming into these individual companies? Is there, additional revenue that's flowing into these companies? No, it's literally greed, which is driving the market right now. So when we are coming over to the S&P 500 Fear and Greed Index, we are in around about 81 to 82, fluctuating every couple of hours or so. We are basically in extreme greed. That is what I want to tell you. If we come over to the timeline, just before we take a deeper dive into the 7 fear and greed indicators, which do amalgamate to this 81 greed reading, if we come over to the timeline, I just want to highlight what previous tops in the S&P 500 have topped out in terms of the fear and greed index. Now, if we come over, you can see earlier in August, we topped out at 68 in greed. If we come into, this is 2022 by the way, if we come over to the 1st of December in 2022, we topped out at 76 in extreme greed. On February the 1st of 2023, this was round about this top over here where corporate insiders were selling. You can tend to also see, this is very interesting, that corporate insiders tend to sell into extreme greed. You can see we topped out at 82. Over in this peak in April of 2023, we topped out in 70 in extreme greed. Corporate insiders sold this top as well. If we then come back over, you can see quite recently in mid-June, we topped out at 81 in extreme greed. And we did have, a correction for about a week or so before trending a little bit higher. Corporate insiders sold this top as well, and we are once again coming back up to round about an 81 to 82 in terms of extreme greed. If you're looking at the fear and greed index, I've been noticing this fluctuate between 81 and 82 for the past few hours or so, but nonetheless, the fear and greed index right now is in extreme greed. If we come over to the fear and greed indicators, you can see the S&P 500 is completely rallying away from its 125-day moving average, indicative of extreme greed. We have really not retested this since around about March of 2023. If we're looking at the stock price strength, extreme greed. Stock price breadth is in extreme greed. Even though market breadth is not particularly strong at this moment in time, put to call options, these are moving into extreme greed. We actually talked about the put to call oscillator in our most recent video over on Bitcoin, and we did discuss, if I just pull this up very quickly, because this is also a on-chain metric which you may want to be privy of. If we come over to the put to call oscillator, quite recently this put to call oscillator bottomed out, indicative that there's really a lot of interest in puts right now. This is of course bearish if you know your options trading. If we come over to the market volatility and look at the VIX and its 50-day moving average, the VIX right now has been getting crushed for quite some time right now. This is the lowest reading we've seen in absolutely ages. If we come over to safe haven demand, this is in greed. If we come over to junk bond demand, we're in greed. All in all, we are sitting in extreme greed right now. This is what is running the market. We are not seeing a rally driven by economic growth, unless you're specifically maybe focusing on the job market and looking at minute increases. We're not seeing a rally based on strong price to earnings ratios, earnings per share, EPS beats, EPS misses. We're not seeing rallies based on new revenue coming into the equity markets. We're not seeing a rally driven by new sales pumping into the equity markets. This is greed, which is rushing into these markets right now. So if we do finish off on the last indicator, the GS sentiment, which is the Goldman Sachs sentiment indicator, this is all the way up at 1.7. Now, this indicator has only come into fruition around about March of 2022. Typically, these on-chain metrics on Isabella.net track back to 1 year. So if you do want to have, further data on what happened in the past, you really need to load up like an equity market chart and, track this as it goes, because this only tracks up to 1 year and then you can't find previous data on this, which is why I have an individual chart tracking this over here. This is a relatively new one in terms of the sentiment indicator, and you can see that we've pretty much moved from extreme fear into extreme greed very, very quickly over on the sentiment indicator. So all in all, guys, like I said, this is just a quick on-chain metrics update for you. Earlier on today, we posted a in-depth Bitcoin video talking about a new trade which I've currently got running. And tomorrow, like I said, I'm going to be looking at some on-chain metrics in terms of global liquidity. These on-chain metrics today in terms of the S&P 500 are very important. I wanted to talk about them, but they're not going to fit the narrative of tomorrow's video talking about global liquidity. So I'm going to keep these separate, 2 cowboy videos in one day. It must be Christmas. But for today, my friends, that's all I've got. If you are enjoying these additional uploads, if you do enjoy this content, make sure to let me know down below by leaving a like and a comment, share the videos with your friends, help me get these videos trending. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Follow me over on Twitter for more of these additional posts and timely news and market sensitive information at 618_Cowboy. It's been your boy Cowboy Trades. I'm out, my friends. Peace.